All right, so today we're doing our normal Q&A slash backtesting stream slash market review. If you're new around here, or if you haven't been to one of these before, basically just put any model, ICT concepts, psychology, anything related to trading questions into the prophecy slash or the public stage chat here, and we'll get those questions answered to the best of my ability. In the meantime, we'll be doing kind of a market review and recap from this morning's stream, which is posted up on YouTube, into the YouTube vid section. If you want to go back and watch that, the entire 2-hour stream is there. I know most people are not going to watch that, but if you struggle with today's price action, I think it's a good resource, obviously, to go back and watch. And those are always posted later in the fact. So if you want to go in and watch those, they're always available. But we'll look at kind of today's price action, what I was anticipating, the demo trade that I took today, going into it, and then obviously we'll answer the questions as we go. So more people join, we'll obviously get the questions answered throughout, but we'll do a market review as we wait. So today we had, let's go to the higher time frame charts here. Let's start on the 4-hour. And clear all of this out. Today on the 4-hour we had, let's actually go to the daily. So the daily chart, we've got this bullish order block here with the inefficiency. Friday, traded back into the range, tapped into that, filled the gap, respected it. Same exact thing here, dropping back into the bullish order block with the inefficiency and into the wick of this, respecting that, shooting back up. So order flow in terms of the weekly perspective that I'm looking for is bullish. My target for the summer is the all-time highs. As we know with seasonal tendencies, normally there's a swing low put in between April and May, what you see in here with SMT, and then expansion towards obviously going into kind of the range of, did it cut out? I don't know why that's been going on. Let me sorry, let me stop my stream and restream with different quality. Custom frame rate 60. Okay, you have to click off of my name and then click back on the stream there if it's my profile is zoomed in, but it should be good now, right? All right, good. But yeah, order flow in terms of seasonal tendencies, we're bullish coming into the summer. I'm looking for all-time highs to be swept, which it should be. We have obviously order flow in terms of the week. I'm looking for bullish prices on the week. So dropped into this, respecting it. Same exact thing looking into Tuesday. Tuesday, we have this discount PD right here in the form of a volume imbalance. It is now used as a discount array. So we tag that right there, shoot back up, and then close, and you see the standard open, low, high close for the entire daily candle. As we get into the 4-hour chart, we'll keep that up in there. So we have, look at the weekly open. Have the weekly open here. Weekly open, same exact thing, kind of open, low, high, close sort of thing. But as we're displacing up and we take out a short-term market structure shift, short-term high, there's no displacement through that. I'll acknowledge that. So it's a little bit more difficult to see. But as we're trading up and as we drop back into the range, the order flow, we're going to be trading the trend until it is blatantly reversing. And we've got the ERL up here. So we have a reclaimed inefficiency down here in discount. That's being triggered right on Monday. So discount IRL. Although it's reclaimed, we cut through candles, and then you have premium ERL up here, which is in the form of the previous week high. So standard low to high range up here, IRL to ERL premium, and just kind of using reclaimed PD rays as we go up into the range, okay? Yesterday was obviously bullish, and we left the consolidation range. So as we're in a consolidation range, it's going to be much harder to find day, week, session trades. So I favor when it leaves, and we can go look for good continuation models, and preferably in a one-shot, one-kill sort of trade, where basically the week, the day, and the session are all lined up. So as we leave the consolidation range with yesterday's movement, We now look for continuation today. As we go to the 1 hour chart, we have a dealing range between this swing low to this swing high. And the reason we're using this swing low is on a lower time frame, like the 15, you'll see that this is an intermediate term low that's creating this new dealing range. But you have a dealing range here, and you have this discount lining up perfectly with the volume balance as we saw. Tags into it during a key time, London. I'll mark out the midnight open here so you can kind of see where we're looking at. So this is the start, opens up, drops back down into the range, into discount, and then starts to displace away coming into 9 a.m. So that's where we're looking for potential expansion targets up into some sort of premium array over here. And you can see we have one premium PD array with this swing high. That's one low-hanging fruit. Then we have another one with this gap, obviously, and then we have another one with this gap up here. And for the purposes we're looking at today, we'll use this just for a very refined premium IRL target. All right, so as we go to the 15-minute chart here, let me take off the new week opening gap. 15-minute chart, we've got dropping back into the range, into discount. Notice how it's running out the PM session low right before it tags into discount and right before it tags into this discount reclaimed inefficiency on the 15-minute chart during London session. Then it displaces away. Look for the continuation during New York. As you normally see, 9:30 comes down, drops down here, starts to displace away. On the 5-minute chart, you have order flow already lining up, so you can be looking for a trade idea. And that was my bias going into the morning. I'll share the screenshot, or not the screenshot, but the chat that I shared this morning into the daily bias stream, or the daily bias chat, which was right here. Let me copy this. So today I said expecting higher prices today towards the external range liquidity pool, which was this swing high, as well as the previous week high up here. Daily chart is moving from internal to external, as well as framing bullish supporting order flow. M15 chart is printing a classic London protraction profile. Targets, the minimum was the previous day high. Favorite drawn liquidity for the session and for the day was the 21,679 ERL, which is this right here. 21, you can't see it. Sorry, this chart right here, this one right here. This ERL. This would be the 21,679 ERL. And then the previous week high is kind of an all-time target for if we were really going to get up there. I don't think it was going to get up there that day, but that was kind of the model for the range. So as you go into the lower time frames here, we see 9:30 classic. The thing you're always looking for the session that I've talked about multiple times, probably in every video you've heard me say it once at least, for the session range, as long as it's not a swing to Z profile, or a swing or a seek and destroy for that matter, you're looking for the very standard low of the session to high of session to be timed. As we know, this bottom range down here should be between 9:30 to 10 in a best case scenario, and at the highs we should see it 10:30 to 11 form the high. For the New York session, that static window between 9:30 to 11 o'clock, that's exactly what we should see in terms of a time perspective. All we're trying to do in this scenario is trying to trade the expansion from the low to the high of the session range. All right. So as we get down to the lower time frames, we have the same exact thing going on in here, where we're opening up, tagging in this case the previous daily high. That's a premium array. We're trading into a premium array. We should look into a short-term discount. So as we drop back into the range, eventually we tag into, there was something that I marked out here on a higher time frame. Anyways, drop back into the range, form this short-term low, which is I've annotated on the stream to be the low of session. And as we displace away, we form a breakaway gap. This breakaway gap, as it's being left open, breakaway gaps are extremely, extremely useful in determining order flow. Obviously, if you have a reversal signature, meaning a higher time frame PD rate in line with bias, tags it, SMT, displacement, etc., the formations of breakaway gaps are extremely useful in kind of confirmation of order flow. So when we see this breakaway gap, and you can see in here, this low, high, lower, low, this would be a miniature breaker, also a change in state delivery. This last manipulation leg, you extend up, you get -2, -2.5 up here. You get -4 to -4.5, and notice how that's lining up with the ERL that we just marked out before. And that's a time-based external range liquidity pool, and that is Thursday's AM session high. Got to be random. So now we trade up. We've got, in this case, a short-term dealing range between this low to this high, drops back into discount, just like we saw in the higher time frame. And one thing I want to mention here is the fact that we have this inefficiency, and I don't want you to mark this out incorrectly. We have, let me clear all this out. This gap right here, you extend down into the volume balance right here. Okay, that's the way that I mark it out. I know ICT has talked about that before. So this is also a discount PD array, as well as this. So I'm going to extend this gap up and kind of combine the two. And that's normally the rules that we use for these inefficiencies. So we've got the inefficiency. This lower portion is in discount. We've got the bullish order block that supports this. Okay. As it's dropping into this, what time does it drop back into discount and tag the bullish order block with the inefficiency? Macro time. Right on schedule. Drops into that, splices away, tags the -2, -2.5, overshoots it a little bit, tags into a premium array. And then the 10 a.m. news comes back inside the market. This is the 10 a.m. right here. So it kind of pumps us up. We drop back down. We have SMT on a higher time frame between these two lows. So it's coming back down to the first presentation gap, as well as this inefficiency, this reclaimed bisi that we have. Starts to splice away again. And I kind of tape read all of this on the stream, so I'm not going to go back in and kind of bore you with it. But high right here is formed at what time? High right here is formed at what time? Okay, so now we have the standard 9:30 to 10 forming the low, and now the 10:30 to 11 forming the high. All right. I think the session in terms of price action on the lower time frame was slightly difficult to read and get probably good trades. But I think overall it wasn't the worst. It was not a swing to Z. It was not something that consolidates the rest of the range, but you just got to be very sniper-esque with your entries and stop loss placements. And eventually we do run out the PM session or the ERL that we were looking for, and then kind of move up into the opening range -1 standard deviation. I'm not going to draw that up for you. I suggest you go back into your own charts, or if you haven't pulled up right now, to mark this out and see where this level is coming from. But it's the opening range -1 standard deviation. All right, come back to that, and then we drop back into the range. Today, since the week, the day, and the session were all lining up for me, I decided to use my one shot, one kill approach, which is basically buying it on what I expect to be the daily low as we're running out time-based liquidity, and then targeting London close as my preferred exit. So between 10 to 12 as an exit. So I'm going to throw on my executions here. I don't like to show these at the beginning because people will get lured in by profit and loss and not from the actual execution. So as you look on a 5 minute here, we know that the daily candle is going to be open, low, high, close. So preferably, like I said, we want to be trading this range of the daily candle. But if we know where the draw on liquidity is that we're going to create that manipulation, we can also be shorting it within the low, sorry, the open to low, as well as the low to the high. So in this case, like I said, let's go back to this higher time frame chart. We've got daily range here. As we see, it's sweeping this intermediate, this short-term low, creating a new dealing range between that low, that high. Inefficiency in a short-term discount on the 15-minute chart, right there, boom, right on discount. We also have this time-based liquidity right here. So the PM session low. We know that the market's going to go from soup to soup, reversal to reversal, higher time frame PD array to higher time frame PD array, right? So when I see this approach coming into the PM, the Asian session and into London, my target is now the PM session low should be swept, reversed, and now targeting the buy side liquidity. That's framed on the weekly perspective. That's framed on my daily perspective. My own personal preference, I'm not going to put my limit order on the discount nor on this swing low. Why not? Because of the fact that since I'm expecting this to be a reversal point, occasionally NASDAQ is going to be the one that forms the SMT. So if NASDAQ is forming the SMT, I'm not going to get filled in on the discount array. Rather, it's going to tag this instantly and then shoot back up, while ES is forming the lower low, the SMT, and then we're going to trade higher. So I don't want to be missed on my entry, if that makes sense. I'd rather get slightly less of an entry and still get filled and then have a slightly wider stop as a result. Where do you place your stop on this? Inefficiency, supporting order block. This order block should be holding price up. Therefore, we can place our stop at mean threshold and one tick below it. And that should be a supporting inefficiency, or supporting order block to the inefficiency and the London low. So as you go back to the execution, like I said, as we drop here's the open should be the open of the new candle right here. And we're dropping back down and trading towards the PM session low. So shorting it in here, going from open to low. As we're tagging the PM session low, like I said, I was not awake at 3 a.m. in the morning. I simply just sit limit orders and put my stop loss and let it ride. So shorting it into here, I've got 2 on, and then I had 8 contracts down here. And you're probably wondering, why is it 8 contracts? Because in order to close out these 2, we need to buy back 4. And in order to buy another 4, it's got to be 8. So I've got basically slightly below that PM session low. I have my limit order for both my short fills and my long fills on the same exact level, right on the PM session low. So it's getting filled out there. Stop loss is below the order block, like I said. And then as it's trading up, now we're taking partials on reasonable time-based liquidity pools. So on a lower time frame, let's actually go back to, yeah, this is fine. So we got the previous daily high, taking 2 off there, boom. As you're running up and taking out the ERL there into the -4, -5, taking it off there, boom. And then I had a runner for the previous daily high, and I'm trailing my stop. So this right here is an intermediate term low, trail my stop to there. And in this case, as it's dropping back down aggressively and forming a sibi, to me, the order flow is now flipping bearish, or it's going to enter this consolidation range. So I'm manually closing out the last one and getting stop filled on this external range liquidity, or on this last contract. So taking majority of what the day is going to offer to me. This is something that I haven't done for the past 2 weeks, just because the weekly profile has been quite difficult for me to find. But I love taking these trades because it's one shot, one kill, and it can offer especially the entire weekly or even monthly goal in one trade. The stop losses aren't huge when everything's lining up. And a lot of times you can set your limit orders either overnight or right in the morning, get in if it's a New York Open reversal, and hold it for almost the entire daily range. So I haven't tried one of these for the past couple of weeks. So to me, the execution is over everything. Obviously the P&L, obviously the range of it looks great, but to me, the process is over everything. So the fact that I waited for the setup, I was confident in it. I put my limit orders on exactly the criteria that I wanted to, and I was completely fine with losing on this. It left consolidation, dealing range discount, dropping into it at a key time. High impact news today, so very clean day to be looking for a move like this. To me, that's all my meeting requirements. So as soon as I identify that market opportunity, I've got to execute as normal. This is a model that I don't normally use. Like I said, it's just once in a while when it's there, when the week, the day, the session are all lining up, then I can take the entire daily range. In hindsight, what I could have done better, probably just trailed my stop to this short-term low and left it there. And I do think that tomorrow's probably going to take out this previous weekly high. I also mentioned into the daily bias chat that if you scroll up there, normally on NFP week, as we have NFP this week, we have, normally there's a good move early in the week between Monday and Tuesday to build sentiment going into NFP. All right. So look at the range between Monday and Tuesday this week. Displacement nicely from low to high and then low to high. I took some trades on Monday. You can't see it on the screen as I did not take them on demo. Just focusing more on my own personal accounts. I showed those executions and screenshots yesterday with the private group. I took a nice 11.3 R trade on the 930 run. But in this case, this is a nice kind of juicy move that I can be done for the rest of the week in terms of kind of demo scalping the trades. But I've been stacking this one up. I know normally I reset my accounts for when I'm going on a one-on-one with someone. I don't like having my executions on screens. It's very distracting. So I'll tend to reset my accounts every trade. I haven't done that for a while. And just for proof of concept, the P&L or account history is about, first trade on this kind of little thing was on the 23rd, or about 2 weeks in or something. Nice revenue increase on about 37% increase on this little demo account. So could reset it, could do whatever, but as just proof of concept for the entire the entire model, the things I've been teaching on the private group and the PDF, things like that. There you go. I don't like showing that stuff normally, but once in a while I think is perfectly fine. So for the PDF guys, I'll continue to find Vantix model examples this week. Tomorrow there may be a stream. I'm not sure if I can get one in, and maybe just briefly for the opening range. Do you think the fair value gap formed at 10 a.m. was a good entry or no? Let's check. So we've got the inefficiency at 10 a.m. Here, got it. Clear this out. I think so. If we're looking at this and we're looking at, okay, we're looking for bullish prices coming into the decision making. I don't think it's bad. We've got order block inefficiency trading into the range. Now, preferably when we're looking at this gap here, after it's just offered, in this case, a silver bullet. The silver bullet here was -1 to -1.5. We got an inefficiency plus a mitigation block. Boom. Up to -2, -2.5. This here, I prefer if this is left open as like a breakaway gap or a measuring gap, because as we look right to the left of it, think of any orders that are printing here, right? Boom, 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 boom. Buying, ships all the buy orders in. Selling, ships the sell orders in. This energetic movement up here, to me, should be left open, right? That's just more speed than inefficiency. The slight upper portion right here, this is the most inefficient section as it just contains the wicks. So if anything, you would see it slightly come into it there. I don't think it's bad trade, like I said, but as we get higher and higher into premium, it gets threatening and threatening and threatening to take further along. So I would like to see preferably some sort of stopper on the lows, SMT, etc., where then I can get in and use that. That being said, I think narratively it works, but one of those things intuition-wise and probably maybe with hindsight, the fact that we're looking at it now, it's hard to say it's going to, unless you're looking for a very bullish expansion day. But decision-wise, if you were to get in here, I think in the heat of the moment as it's dropping into this with the inefficiency, with the order block, if you had a limit order, for the example, that's perfectly fine. This is an exact reason as to why I don't use limit orders except for very specific reasons. I choose to normally market in or stop market in, or like stop limit in, because of the fact that I want to avoid trades like this. I've been stopped out too many times where something like this is avoidable to me. I'm completely fine with having some sort of little reaction off of here, marketing in a couple points off of it as it's wicking, and then place the stop in the normal spot and up to here. So it's really up to you. But if you had a limit order here, you're getting filled in, filled out, I think that's a perfectly fine trade, right? Within macro time, on an inefficiency and a short-term discount with an order block, in line with drawn liquidity, meets the requirements. That's just one of those things that you got to go back in after the fact and see, why did this lose? The reason why this lost, as we go to a higher time frame chart over here, preferably at the low of the session, you want to see what? SMT, right? To confirm that now that's meaningful manipulation for the session has been over. And we want to look for kind of higher prices. Notice how between 9:30 and the 8:45 swing low, right? At 9:30, 8:45 swing low, we don't have any higher time frame SMT between any of them, ES, NASDAQ, or YM. So in order for that low to then be qualified, we have to make either a new one up with SMT, or right at 9:30, it's going to print that low. So when the 10 a.m. news comes out, it shoots up aggressively in the beginning. Then as it drops back down into the range, this is where we're forming the true SMT at the session low. And we know that between 7 to 10, 10 o'clock is our last key time we can do this. Anytime after that, you either have the bias wrong or it's going to be a very choppy day. But if we're bullish, the latest time we can see this kind of signature at is 10 a.m. The earliest we can see that signature at is 7 a.m. So we have a range between 7 to 10, but we have hot zones within that range. 8:30, 9:30, and 10 o'clock are normally the key times that we look for this. When you see that lining up with bias, etc., it's a very good opportunity to potentially be turtle soup low, or taking a nice SysD confirmation out of the range, something like that. Does that make sense? Bummed I jammed my stop after entering at the close of 940. Right here. Couldn't trust the bias to get in during macro. Small winner for the day, but kind of stopped moving the stop. Did you get stopped on the 940 candle here? Which one did you get stopped on? Just this run down here. 941. Oh, that's a crazy aggressive stop run then. Oh, I see. Yeah, I mean, yeah, you gotta. That's a very aggressive stop placement. Yeah, to me that's either indication of one of two things: either your contract size is way too high, or number two, you just weren't confident in the move. One of those two things. Yeah, yeah. So a combination of both will make it very difficult to do that. So, but always an opportunity if you look at that, and obviously you look at this, it's like something that's very fixable and obviously a very profitable trade if you were to let it run. Where let that happen once, fix it for tomorrow, and never let it happen again. It's always just a learning opportunity. Insanity is letting things happen over and over and over again, and we never fix it. So, yeah, if it's simple mistakes, right? If you're just not confident in the trade or high leverage is too high, very simple pushing of buttons to fix that. Drop the risk, be confident in the trade. But obviously, psychologically, the way we get our confidence up is just to remind ourselves, number one, that we're a good trader. Look at all the things we've accomplished. Number two is just to absorb data in hindsight like it's nobody's business. So you got to go in and figure out what you did wrong, figure out how you can correct it, and then eventually you progress up the ladder, right? Struggling when it comes to my higher time frame bias, when it comes to live New York session bias. Today I took a short at the previous day high premium SMT, but I knew higher time frame alignment. Higher time frame was bullish and just tend to go against the trend some days. That's fair. I think it's one of those things where you may be new to trading. That was something that happened at least in the beginning of my trading career. That was something that it's hard to trust continuations, and it may also you may not be new in your trading. It could just be something that's kind of blossomed into other things. But the bias is just a filter, right? So you have to have some sort of you can't lackadaisically do bias. You can't do it lethargically. You can't half-ass a bias, even if your bias is wrong. If you have 17 reasons as to why your bias is bullish, you're filtering out. You're just looking for longs in that kind of scenario. Then it filters out 50% of all the information. You can kind of filter. You're not avoiding it. You're just filtering it with the lens of now the higher time frame is bullish. So we're just looking for longs in this preference. That does not mean that every candle is going to be green. That does not mean also that there's not going to be shorting opportunities. There's always going to be there. So sometimes what happens is either you have a hard time trading continuations, or just we forget the fact that the market's always offering opportunity. And when it does offer that opportunity, we get FOMO and we get scared of, oh, maybe my bias is wrong, or maybe this is the entry that I need. Or you're just trying to scalp. Sometimes we think we're almost too good at our trading and we try to scalp here to here first before taking it from here in line with our higher time frame bias. So all of those could be root causes to the psychological problem. But normally as you go back in, you kind of think of what was the reasoning as to why I took the trade counter bias. There's always some lingering thing underneath that you can kind of find, fix, and kill, and then kind of progress onwards. But trading against the bias is just something that I think eventually it's very easy to grow out of. It's not a huge psychological problem in terms of when you trust a bias, right? When you spend 20 minutes, 30 minutes on it, you're like, okay, I think it's going to be bullish today. At that point, it's very hard to flip bear or trade any shorts unless you flip your bias, which in the beginning, flipping bias is a very difficult thing to do because you don't have enough data to know when the bias is wrong and when the bias is right. So it's just about getting the reps in and then obviously correcting it in backtesting and in hindsight. Correction after the day, like these market reviews here, increase our skill way more than someone who's just watching in the beginning, doesn't look at it ever again. So the fact that you're showing up to these, and anyway, I'm talking to everyone. The fact that you're showing up to these after the fact and just seeing, even if you know what today did, even if you know what the moves were and what you did wrong and what you did good, the fact that you're showing up to learn. And for me, this is the way that I I learn from it as well, because as I'm teaching and as I'm covering them, I see things that I didn't see before, like this exact example over here, where we see this -1 to -1.5 being our standard silver bullet. So I learn new things every day, and I see where I could have done better. Like I said, I'm constantly trying to improve. So with my one shot, one kill, like I said, I could have trimmed my stop to here and just never left. I got probably too aggressive with my stop trimming, trying to just almost choke out the trade up here, which I think I'm still happy with, as it flipped order flow for the day. I took basically the daily low to daily high, and I'm not going to be greedy and say I want more, but there's always something I can improve on. So as much as we can seek learning and seek wisdom, even if you have a good developed model, that's the only way we beat losing and the only way we beat winning, right? If we think, okay, when we take a win, what can I do better? That kills the ego, that kills the greed. And when you take a loss, how do we kill the fear? How do we kill the low confidence? The fact that, okay, I'm learning from this. So learning is really the solution a lot of times to, and just the approach to learn is the solution to a lot of our psychological problems. I learned that from Mark Douglas. I think it's brilliant, and really is the only kind of, in a sense, the holy grail of psychology. If you, obviously, the goal is to not care about outcomes and not care about the wins and losses. We want to be completely process focused. The only way we become process focused is just to be ever adapting and ever learning. And as humans, that's what we do best. We're able to adapt to heat, cold, underwater, anything. You look at all around the world, people are always adapting. We went to the moon and back, right? So as humans, we are forced to adapt. It's those who don't adapt that are stuck in their comfort of whatever it is and complain about the problems. If we just force ourselves to adapt and always change about some things that we use are just not going to be used anymore, and we'll always look to the new thing. Don't have shiny object syndrome. Don't look for something new and never actually sit down and become a professional, but always look to learn and refine, even if it's something very small in your mental game, for example. Maybe it's not in the technical, just mentally. Like, for example, do a pre-game checklist mentally. Anytime I wake up in the morning and I'm going to wash my face and brush my teeth and go to the bathroom, that entire time I'm in the bathroom, I'm doing a mental check. So I'm saying, okay, do I have any expectations today? Is yesterday's outcome affecting my process and outlook today? Am I ready to give myself money today? What should my expectations be going into today? Is it going to be difficult? Is it going to be easy? And that mental checklist for me, just to kind of address and do a brain dump and kind of just put it out. Jarvis, let's see what's going on. That to me is extremely, extremely beneficial. I have to do one of those things. And the only way that I learn that is obviously from doing it over and over and over again and seeing, okay, I would be one day from a payout or one day from passing an eval and blow the account. Why is that? Because we sometimes have expectations coming into the session, or we have baggage that we're carrying from the previous day. And the baggage could be both light or heavy. It could be light in the sense of we have an expectation that, okay, we won yesterday, our chest is all puffed out, and we think we're going to win again today. Or it could be the fact that you lost yesterday and now you're coming into the day and, it's going to be harder to trust your setup as it's there. See you, Prod B. Take care, my man. So always ever learning, always ever changing and adapting is one of the most important things we can do as traders and as humans to ultimately survive in the world that's there to do nothing but kill you. So overall, that's kind of the mark review for today. Obviously, we'll answer any questions. If you got any questions, you can put them in the chat, but mark review for today, I think, is pretty much done. There's nothing much I missed. I think you could potentially look for the same kind of setup in here too. If you look at the daily chart, the higher time frame, you can kind of look at what's our PD arrays. We've got obviously this daily imbalance and this daily imbalance we're targeting, but right now this short-term high is the target. Discount PD arrays would be here, as well as discount of this wick. That'd be quite far, but I'm looking for now the fact that this is a pretty healthy candle. We should not really drop below into this wick, nor into this order block. I'd favor it just kind of continues to move, tags this, and we can be done for the week. As you know, tomorrow, I say don't have expectations, but you should have a framework for tomorrow. We have NFP week. So Wednesday AM session is normally the last high probability session out of the week. You can make a slight exception for Friday post NFP, but Friday post NFP is still one of the it's the second hardest day to trade per ICT. Thursday, absolutely no trades from me. I'm probably not even going to be opening it. So Wednesday, tomorrow, AM session, I'm not going to be holding anything into the PM session. I'm not going to be holding anything into lunch. So tomorrow, if I do find a setup, if it offers it to me, I'll be trading it from session high to session low at the maximum. Otherwise, I'll just be trading intra range within that session high to session low, or maybe where the daily expansion is going to be going, but I'm not going to one shot, one kill going into tomorrow. Yep, this will be posted into the YouTube vid section. What timeframes do you use for bias? Sometimes I get conflicting biases on the 4 hour and the 1 hour. Is it best to just skip those trades when bias conflicting? So the each of those timeframes, right? I have 3 times that I look for: the H4, the H1, and the M15. Each of these has associated ranges that we look at. So the H4 is paired with the weekly, meaning when we're looking at a weekly chart, we don't always see it go from gap to liquidity. Let's pull up the weekly chart here. It's best when we see that, right? Here's a week where it goes boom, right into a weekly gap to weekly sell side. IRL to ERL. Beautiful. Do we see those PD rays every single week forming? No. So we need some sort of lower time frame chart that's going to still work with the weekly chart, but offer us more data. You see those with time frame aligned charts. So the 4 hour, in this case, is paired with the weekly. The 1 hour is paired with the daily perspective. The 15-minute chart is paired with the session perspective. So each of these charts will give you a kind of in-depth look to what each range is showing. And those respective PD rays can also be trusted as daily manipulation targets, for example. So like we saw in there, the 1 hour discount was not seen on the daily chart, but still works for the daily manipulation. So when the 4 hour and the 1 hour are conflicting, that means, think about this. If the weekly is bullish, is every day going to be bullish? No. You have a couple of days where we're either consolidating or dropping down, and you have a couple of days where we're going up, a couple of days where we're retracing. So the weekly may be bullish, but the day could be bearish. Now what are we doing? We're trading counter bias from the weekly perspective. That's going to be slightly higher resistance. It's going to be consolidation range. So preferably you want to see the 4, the 1, and the 15 all lining up like that. I'll reference the weekly. I'll reference the daily as well, but just occasionally. It's not really important to me. Super important at least. So if the 4 hour is bullish, for example, the 1 hour is bearish, I'm going to drop to the 1 hour. I can't really, so let's say we don't have a weekly perspective. Like the past 2 weeks for me have been slightly difficult in finding weekly profiles and finding weekly ranges. So when that happens, I'm still referencing the 4 hour just to see what's going on. Then as I get to the 1 hour chart, I'm looking at what the day is doing. Where's the daily manipulation? What's the day specifically going to target? If I can frame a setup there and the daily target hasn't been met yet, let's trade in that direction. Let the session do its thing, trade towards the daily target. If then that's not there, the absolute lowest I can go is to the M15 and look for a session range. I may not know where the week is going. I may not know where the day is going. That's already very, very low in the gutter. It's kind of a bad day. It's going to be very hard to trade. But at an absolute minimum, I got to know where the session's going. So sometimes the day is kind of funky, the week's kind of funky, but we know, okay, the session's going to do this. Very obvious liquidity pool or bullish coming into the session. And maybe it's going to be a swing to Z, but we at least know that 930 is going to pump up there like yesterday. Then I'm looking for that kind of setup. So, but that's a very scalpy kind of trade. So if I only have this, I'm scalping. If I have this, I can trade this. If I have this, I can trade this. Does that make sense? So when I have the weekly chart in mind, I can trade the entire daily range like you saw today. If I have the daily chart in mind, I can trade the entire session range. If I have just the session range, well, I can kind of just trading the macro to macro, or even maybe just intra-session right there, taking it from maybe the session midpoint to the session high, for example. But it is preferred when all those things are lining up because, like ICT says, if you know where the weekly is drawing to and you're trading in that direction on the days that it's trading in that direction, you got moves like this, and this. very smooth runs. It may not be perfect, but it's way smoother where it's offering you a much larger range to trade in. And it's going to be very low resistance compared to a day where the week is bullish, the day is bearish, the session is bullish. What the heck are you supposed to do then? Right? That's like a swing to Z or a seek and destroy profile. Best to skip those in the beginning. Best to study those in the beginning. And as you progress with your model, you'll see, okay, here's where I can take that. So like day like yesterday, right? Day like yesterday, you could either classify it as a London protraction or as a swing to Z. I classify it personally as a swing to Z just due to the range of midnight to noon. We're looking at just midnight to noon. We see we formed the London low, we formed the New York Open high, but at noon we're still within the range. So it's almost like a delayed classic London protraction, but in terms of the rules, this is qualified as a and classified as a swing to Z. So I'm know where the day is going. I may not know where the week is going because it's Monday. So I have now the day, the session. Okay, well the day classic London protraction potentially we've got buy side here, buy side here, buy side here. And this is more important to me. Asian session. Why is an Asian session important? Because Asian session is normally right around midnight open. If I'm bullish and I think it's going to be a nice expansion day, why the heck would I be targeting just the open? Is it going to be open, low, meander around? No, it's not going to be. It's going to be open, low, past the open, up to the high close. So I'm looking for preferably premium PD arrays, which would be above whatever my midnight opening price would be, which in this case, midnight's right here. So I guess this is still a premium array, but this is still contained within the daily range. So I want to be looking for external pools here and here that I can be targeting. Now, in this case, it's relative equal highs. That's a very, very juicy pool of liquidity that we always can be targeting. So on 9:30, I'm basically getting in, boom, right at 9:30 prints, selling it right there. And that's my entire trade for the day. And I showed that execution yesterday. I'll show you. Let me pull it up here. This is the one I took with the PDF group with the new model. Basically just taking it from the 9:30 low, tagging up to there, and that was 11.3 R. And then back inside the range, there's still a macro setup short that I took on the demo over here, and just back into the range, targeting the swing low. So in this case, we kind of know where the session's going. We're trading it from macro to macro, but that's the absolute minimum I'll go. I'm never going to try and go in there and try and just scalp just because the macros are moving. I need to know in some sense where the session's going. And once that session liquidity pool has been targeted, it's hands off. Or I'll choose not to trade. When we're already down to, like I said, we're already down to here, it's going to be quite difficult, and we're most likely, at least for me, I'm most likely either going to be taking a scalp that's going to be max giving me like a 2-to-1, or I'm going to be losing my trade. Simple as that. I'm going to be losing on a day that's going to be a very low probability where things are not in favor for my kind of entry models, or I'll be taking a very low risk to reward scalp that probably in the long run is not going to be profitable. So it's best to just, if I'm going to trade the days where just the session bias is involved, scalp on the very, very high quality, high volatile moves. And if I lose there, I sit out. Otherwise, if it's just within a range and it's seek and destroy, you'll catch me sleeping until 10:30, wake up, the move's already happened. I've got no urgency or no impulsiveness to go back in and trade when the move's already happened. So to me, that's a little cheat code that on the days that I'm not trading, I'll maybe sleep in for another 20, 30 minutes. And by the time I wake up, it's already 10 o'clock, it's already 10:30, whatever it may be. To me, it's like, okay, at that point, why would I blatantly break my rules now? It's past the time that I'm looking to trade. So little things like that. And that's part of my model, right? It's anything that increases your ROI on this. If sleeping in for 30 minutes improves your win rate, improves your ROI in trading, to me, that's a winning day. Any day that you follow your model and follow your rules and do what you need to be doing, journaling, that's what you have to tie all of your mental energy towards. If you tie any mental energy to losing, winning, it's going to be inconsistency. Consistency is only found when you tie everything to the fact that you woke up at the same time, the fact that you got in front of the charts, the fact that you took or didn't take the model that was presented on that day, the fact that you managed your entry the way you should have, and the way that you journaled after the fact. Nowhere in there did I say outcome. Nowhere in there did I say win, lose. Because at the end of the day, number one, it's night. Number two, you got other stuff to do. So trading isn't everything. You gotta journal, and you gotta just move on with things. So the more thought energy you pump into, I won. How great is it to win? More concern yourself with that winning trade was produced by the fact that you have a winning trading mentality. So focus on becoming a winning trader. Do not focus on winning trades. Focus on becoming a winning trader of what you need to do today. Tomorrow you can't prove it. Yesterday you can't, right? Can you prove tomorrow's going to be there? Can you prove with some objective reasoning that yesterday happened? You can't. The only thing that you can focus on is right now, today. That's the only thing that you can prove is real. So it's really the only thing that you even know is true as you're experiencing it. So if we just focus on every single day, we've got one task. You don't worry about tomorrow's task. You don't worry about how you're going to do this for another week or a month or a year or 4 years. You just focus on the fact that you got stuff to do today. Can you just manage risk today? Can you just journal today? If you can't do it today, how are you going to do it for however long? Right? So you focus all of your mental energy and psychology on the fact that it's all process. And as soon as you realize that, trading becomes easy because your rules, you find your rules are just, it's just a refined model. Why would you not follow your rules? Your rules is built from pain and experience. You said these are the rules. No one told you those are going to be the rules. You said I'm not going to trade at London, and then you're trying to trade the 350 macro and staying up till then. It's based off of rules and experience and pain that you faced yourself. Why would you not trust yourself to produce the best results and the goals that you're looking for? Right? So long-winded answer for what time frame bias we look for, but the psychology bit's always got to be thrown in there because it's 90% of trading when you get to the top levels. All right. So we've been going for about 47 minutes, longer than I thought. So I'll post this up on YouTube as usual and send the link into the YouTube vid section. And you'll find that unlisted, so you're going to access it right through that link there. If you got any questions that I missed, let me know. Send me a DM. I'll be on vacation from tomorrow till the 12th. So I don't know if I'm going to have Wi-Fi from like Friday to Sunday. I'll be probably either that day. I'll either be on Saturn or Neptune, one of the two. I don't know. I have to look at my itinerary. So I'll have to check it out. But just let me know. I'll answer the questions as soon as I can. And I'll catch you guys soon. All right. So journal if you haven't already. Screenshot your trades from today. See what you did well. See what you did bad. See what you got to fix. See what you got to keep the same. So until I talk to you guys next time, be safe. And I will see you guys soon. Peace.